And what I'm going to do is I'm going to, okay, 1 second. I'm just going to actually. So I'll just spotlight it so you can see the board. Okay, is the board visible to everybody?
Yeah.
Okay, so today what we're going to do is, okay, we're going to look at demand and supply. Okay, so we are going to look at that in great detail. Right? We'll go through every aspect of it. Okay. So this forms the basis. When you ask anybody how's the price of something determined, it's always demand and supply. Okay, unless the government is setting it. Okay. Okay. Now, who would like to pick a product? Anybody?
Yeah. The iPhones.
iPhone. Now, Deepa, who said iPhones? It was not Deepa. Was it Poonam?
Poonam, yeah.
Can you tell me one thing that will determine how many iPhones you want to buy?
The price.
Very good. Price of iPhone. Very good. Deepa, something else that will affect how many iPhones you want to buy?
The quality of the phone.
Yeah, the quality of the phone. Fair enough. Quality of the phone. Okay. Okay. Now, Shagun.
What about the need?
Need. Okay. Whether you have a need. Very good. Okay. Who else?
Model.
The model. Okay. Okay. What else? Anything else that will affect?
Actually, how useful it's going to be for me, or whether I'm buying it just because it's a trend.
Okay, useful versus need. Okay, is it a trend? What else?
The features, like the customer service.
Customer service.
How good the customer. Yeah.
Customer service. Okay. Okay, now who do we have who has not spoken up till now?
So, Sona.
Nidhi.
One second, Nidhi is unable to see anything.
Oh, she is. Okay, sorry.
See and hear. So, any setting, anybody can help her with.
Let me see.
How does she go to her settings, and she needs to go to her settings?
I'm just seeing Nidhi Chaudhary. Nidhi, your mic and your camera is both off, but that doesn't help. I mean, that's not going to affect how you can see me, right? Yeah, that is.
Her camera is off.
Achha.
What do I do? I leave the meeting and join again?
Yeah, that might help. That might help. Yeah.
Okay, do that.
1 second.
Thank you, Nidhi. It's just starting. Okay.
Yeah, I've left the meeting.
Okay. You just wait for Nidhi to come back.
Again.
Yeah, just get back on. When you get back on, it says join using computer audio. Now you click on that.
Yeah, I was able to hear you people.
Okay.
1 sec. Join from your browser. Nidhi. Joining the meeting. Can you hear me?
No, we can't.
Yeah, I can see. Yeah.
I can hear.
Okay. Now you're good to go. Yeah. Okay.
Can you hear us, Nidhi?
Yeah, she can hear.
Perfect. Okay, so now, who hasn't spoken? Santosh. Santosh, tell me your favorite actor.
Santosh is not joined in, Sona.
He's not joined. It's a list of attendees. You said, okay, all right. Pratibha, could you tell me your favorite actor?
Favorite actor?
Yeah.
Amitabh Bachchan only.
Excellent, Amitabh Bachchan. Okay. So now Amitabh Bachchan comes up and advertises for iPhones. Okay, and says this is what he's bought for everybody for his daughter's his granddaughter's 15th birthday or 10th birthday. He's bought iPhones, the latest model. Do you think people will be more likely to buy iPhones or less?
More.
Exactly. So basically advertising, right?
Yes.
Okay. Now suppose, COVID, because of COVID, people's income falls. Okay. So income will influence how many, in the market, maybe not for individual. I mean, for income individual also, it'll help. It can also, when you look at the market as a whole, income. Okay. What about other models that have other features which are similar to iPhone? Or Apple products stand by themselves, right? Okay, I totally agree. They're, in a class by themselves. Okay. So anyway, so the point is that for any good or service is like a haircut, a movie, a lecture, a day at the spa. That's a service, and a good is like a television or car. Okay, that's a good. Okay. Now, for any good or service, many things affect how much you want to buy. All right. So what we do is we know that we want to depict it in a two-dimensional space. So what we say is we take the price of the good itself. Okay. Okay, can just make sure I'm recording. Okay, yeah. All right. Price and quantity. Okay? So what we say is, let me ask you. So we take the price of iPhones, okay? And we, for everything else, we say it remains unchanged. Now, in reality, of course, everything is changing, right? Somebody's advertising, new products are coming out, people's income is changing. Whether it's Diwali or not, it's that is something that is Diwali will come, people want to buy more. But what we say is, for right now, we say Ceteris Paribus. Okay, this is a term that we use in economics. We say other things remaining unchanged. It literally means other things equal, but we're saying other things remaining unchanged. Now, assuming that everything else is remaining unchanged and only the price of the good is changing, let's do the following. Okay, so how much does an iPhone cost, the latest model?
1 lakh something, whatever.
1 lakh something. Okay. Okay. Let's say 20,000 are being bought each year in Delhi. Okay. Now, if the price goes down to 80,000, do you think more people will buy or less people will buy? More, everybody agrees?
Yeah.
Yeah, more people will buy.
And then suppose it goes out to 75,000, even more people will buy, right? Let's say, I'm just making up these numbers, right? Let's say the price goes down to 60, this will maybe go up to 40,000. I'm just making this up, okay? So the idea is that as the price of something goes down, quantity demanded goes up, okay? So let's depict this graphically, okay? Quantity. So on this, we have the price of iPhone. So let's say it's 1 lakh. Sorry, let's start from here, 1 lakh. And let's say 90,000. Or I said 80,000, actually, I said 80,000. And then we have, let's say, 60,000. And then we have, let's say, 40,000. Let's say we have 20,000. Zero, and this is the quantity. So let's say for a price of 1 lakh, let's say, okay, 20,000 phones were being bought. And then when the price went to 80,000, let's say 25,000 were being bought. Then let's say when the price was 60,000, let's say 32,000 were being bought. And so on, okay? Let's say 40,000. Again, making up these numbers at the price of 20,000, let's say 45,000 are being bought. Now, what we can say is everybody with me so far?
Yes.
So what we can say is this is my demand curve, okay? And this is my demand curve. So what they're showing me is demand curve is showing me how, as the price changes, what is going to happen to the quantity demanded. given that everything else is remaining the same. Ceteris paribus. Okay, and now the movement from A to B. Price goes down, you buy more.
ये words नहीं समझ आ रहे. Sorry.
Okay, words नहीं आ रहे. अच्छा, ठीक है, I'll turn this way. Okay, so
नहीं ये जो term आप लिखे ना
Ceteris paribus. Ceteris paribus is a Latin term. This means other things being equal, other things remaining unchanged. So what we are saying is, we know many things affect how much you buy of iPhones. Your income, your taste, whether it's Diwali or not, whether it's, a new model has come out in another phone, whether Amitabh Bachchan has advertised for it or not, and whether people believe that COVID is going to go away or not, etc. There are many, many factors that affect how much you buy. The customer service, what you're expecting. Suddenly you come to know that 6 of the customer service centers are going to be closed down. Okay, you say, oh, you know what, I was planning to buy it, but I don't think I'll buy it now. Or you hear that they're going to open up more service centers. Okay, so all those things are there. Okay, so what we do is, we know that many things affect how much you're going to buy. But for right now, for the next 7 to 10 minutes, we are assuming that these things remain unchanged. We know they will change, and we will incorporate that very shortly. Is that okay? Does that answer the question?
Yeah.
Okay, so ceteris paribus is a Latin term that we use. You can also say all other things equal, all other things unchanged. Okay, sorry. All right, now, so this is what it is. Now, when we move from A to B, okay, so we were saying if the price is 10 lakhs, now it comes down to 80,000. We are moving from buying 20,000 to 25,000 will be bought. This movement from point A to B is called a change in quantity demanded. Okay, we're just going to go with this for the moment. Okay, now let's take a look at something else. Okay, right. Let's look at instead supply. Now, let's say at a price of 1 lakh, let's say the company was providing, let's say 80,000 phones. I'm just making up this number. If the price went down, okay, suppose the government said you can't charge more than a certain price. Would the company be willing to supply more phones or less phones?
Less.
Does everybody agree?
Yes.
Agree?
Yes.
Similarly, if I told you that, let's say the price of petrol we are looking at, okay? So let's say petrol is $45 a barrel. Then Saudi Arabia is providing petrol, okay? Then the price of petrol goes up to $60 a barrel, then Kuwait also kicks in. Then when the price of oil reaches $110 a barrel, then USA also kicks in. Because USA needs to have a little bit more because they produce oil by fracking. So for Saudi Arabia, they just have to dig into the ground and the oil is right there. So the cost of production is cheaper. So does everybody in the class agree that when it comes to supplying a good, as the price goes up, quantity supplied will go up? Again, assuming ceteris paribus. You are providing something, okay? Let's say you're selling cars, you're making cakes, okay? You're selling chart outside Lady Shram College, for example. I always give that as an example. Okay, if the price went up for some reason, okay, we're not saying how, you think people will be willing to supply a greater quantity. Is that okay with everybody? Can we go with that?
No.
Yeah.
No? Okay. All right. So think of some other product, okay? So let's think of something else, okay? All right. Let's take a look. Okay. So think of some product, Deepa. Anything.
Like you said, chart, it's a perishable. Suppose price goes up and people don't want to buy, I'll be wasting my money.
No. Perfect. Very good, Deepa. Very good. So we are not saying what people want to buy. I'm saying how much would the supplier be willing to sell. So suppose chart was being sold, okay? Let's say the price of chart was 30 rupees a plate. Okay, now suddenly, for some reason, we are not saying why, okay? Hypothetically speaking, now the price becomes 45 rupees a plate. Do you think more people will come and try to sell chart outside LSR?
Yeah.
Okay, how much they go? Suppose they could sell all of it. Okay, so suppose the price was 30. Now, what will happen is typically, okay, so do you think when the price goes up, for whatever reason, we have to put two things together so it will become obvious in a minute, okay? But suppose the price, if I am a seller of something, I know before making a decision how much to sell. Suppose I think that if the price were 30 rupees a plate, how many plates would I be willing to supply? I said, but if the price were 45 rupees a plate, how much would I be willing to supply? If the price were 100 rupees a plate, how many would I be willing to supply? That is all that the supply curve is showing me. At each possible price, how much am I willing to supply? How much I will end up supplying is a whole other story.
Okay.
Okay, so think of something that you are supplying, okay? Let's say that there are people who are people helping people learn how to use computers, okay? Now suppose that in Bangalore city, they need people to teach young girls how to operate computers, okay? Now they put an ad in the newspaper saying that we're going to, we need volunteers. So some people will volunteer, okay? Then they say, you know what, we need more people. So they say, you know what, we are going to pay 20,000 rupees a month. So they get more volunteers. Suppose they say we're going to pay 3 lakhs a month. Do you think many more people will apply?
Definitely.
Definitely, okay. Would that make sense, Deepa, then?
Yeah, yes, yeah.
Okay, so
yeah.
that's it. Okay, so that's the way to look at it. You're right, absolutely. Supply is the hardest one to teach. Because actually, when you teach economics, it takes 3 months to actually prove to the children after you've done all the cost curve that supply curve is upward sloping. So here we just have to go with, a little bit of faith, okay? All right, so basically, this is the supply curve, okay? Supply curve is telling me that as the price of something goes up, sellers are willing to bring a larger quantity to the market. How much will finally be sold in the market is a whole other story. All that the supply curve is showing me is for each different possible price, how much would suppliers be willing to bring to the market? Everybody with me so far?
Yeah.
Yes.
Excellent. Okay, now let's take a look. One second. Sorry, guys. Nobody's supposed to come to my house, but because they're here, I will have to. I apologize for this. Sorry. Now, so sorry about that. Okay, so now let's say this is my demand curve. Okay, everybody with me? Okay, and now let's say this is my supply curve. So suppose there is a product. Okay, can anybody think of a product that has never been brought to the market, something completely new? Okay, Poonam, are you there?
Yes.
Yes, Poonam will think of a product.
That's not come in the market.
Yeah, something new, completely new, for which we don't know what the price is going to be.
The cost of using robots.
Excellent. So let's say we have robots. Okay, very good. Okay.
The cost of using robots.
Perfect.
Excellent.
Robots.
So let's
Okay. So let's say you have a robot that does your cleaning in your house. Okay. Or serves food to your guest. Okay. So how much do you think you'd pay for one of these? A robot that comes and cleans the kitchen while you're sitting and having a cup of tea.
Probably cost some lakhs.
Perfect. So let's say it's 10 lakh rupees.
Probably cost some lakhs.
Perfect. So let's say it's 10 lakh rupees. Why is there a lag?
It's echoing.
Yeah.
Yeah.
Echoing,
It's
no?
echoing.
Yeah. My God, why is it started now? Okay.
Everything should go on in mute.
Okay, somebody could be, yeah. Okay, everybody else go on mute and then you can unmute yourself. Okay. All right. Okay, is there no echo now? Perfect. Thank you, Deepa, for figuring that out. Thank you. So now let's say that a new robot has come on the market, okay? It's a kitchen robot, okay? It can chop vegetables, it can clean, and you just have to, speak into it and say kadhi chawal, and it'll get everything together, okay? And let's say that the company says, okay, you know what? I'm going to price it at 10 lakh rupees. Now, hypothetically speaking, I'm just making up the situation. Let's say this is where 10 lakh rupees is, okay? So at 10 lakh rupees, what is the quantity demanded? Let's say this is the quantity demanded. Can everybody see what is quantity demanded?
Yeah.
How do we find out quantity demanded? Take this price and go up to the demand curve. At this price, what is the quantity supplied? Can everybody see? This is how much suppliers are willing to supply at this price. Okay. Now, Nidhi from Willems will tell me which one is greater, quantity demanded or quantity supplied? Quantity demanded or quantity supplied?
Demanded.
Correct. Quantity demanded is greater. Does everybody see that?
Yes.
By this much. So correct. Quantity demanded is greater. Yeah. Does everybody see that? Please. Yes. By this much. So what? Okay. Yeah. Could everybody go on mute, please? Yeah. Now, so quantity demanded is greater. So what will happen? The market, the robot comes on market and it gets sold out very quickly, like a Taylor Swift concert tickets. Okay. And people are hammering on the door saying, we want. You know, there's so many people, like people are using their contacts, etc. saying, you know, could you please get it? I really need it. Okay. So there's a shortage. And how much is the shortage? This much is the shortage. So in the next time period, the producers will increase the price. Does everybody agree?
Yeah.
Okay. So now the question is, how much will they increase the price? Let's take a look. So let's say, hypothetically speaking, they take it up to 11 lakhs. Now at 11 lakhs, let's say they go up here. Now at 11 lakhs, what is the quantity demanded? Quantity demanded is now this much. And how much is quantity supplied? Quantity supplied is now this much. Once again, quantity demand is greater than quantity supplied, but the shortage is much less. Okay, it has become less. Earlier it was this much. Now it is only this much. And this will keep going until you come to this point. This is known as the equilibrium point. At this point, quantity demanded is equal to quantity supplied. If the market reaches here, the market has no incentive to move unless something else changes. Is this clear to everybody?
Yeah.
Okay, now let's take a look at the other way around. Okay. Okay, this is supply. Okay. Now let's say instead of starting at 10,000, they had done the market research, and the 15 lakhs. Instead of that, they started the price at 15 lakhs. Okay. Now at 15 lakhs, the way I've drawn it, this is the quantity supplied. And what is the quantity demanded? Just go up to the demand curve at 15,000 and see. This is the quantity demanded. Which is greater? Nidhi without an E. The other Nidhi, please answer. Which is greater, quantity supplied or quantity demanded?
Ruchi asking.
I saw two Nidhis actually in the list.
No.
Okay, Nidhi, okay, sorry. All right.
Sorry, I made a mistake.
No problem. Ruchi, could you answer this question, please? Which one is greater, quantity supplied or quantity demanded?
Ruchi, you
demanded.
Okay, so let's take a look. Okay, so at 15 lakhs, what is the quantity supplied? This much is the quantity supplied, right? We go all the way here. So this much is the quantity supplied, right?
Yeah.
Okay, and how much is the quantity demanded? We go up till here. So how much is the quantity demanded? This much.
This much.
So which one is greater, the blue all the way till here or this much?
Supply.
Correct. So quantity supplied is greater. Okay. So what we have is something called a surplus. suppliers wish to sell this much, okay, but consumers only want to buy this much. This much is the extra. Is this clear? So some goods will be left unsold. So the suppliers figure, you know what, we'll have to lower the price. So they lower the price. Now let's see what happens. Let's say they lower it to 14 lakhs. So they lower it to 14 lakhs, okay? Now in this case, what is happening? Now at this price, what is the quantity supplied? This much is the quantity supplied. We go up to the supply curve. How much is quantity demanded? This much is the quantity demanded. The shortage is still there, but it's much smaller. Okay, and they bring it down further until they reach this point. And at this point, quantity demanded is this point, which is on the demand curve. It is equal to quantity supplied. So let me draw this again. The two are intersecting. So what is quantity demanded out here at this price? Just go here, take a look at demand. This is quantity demanded. It also happens to be quantity supplied. Why? Because the supply curve is also going through this point. So at this point, whatever stuff the producers bring to the market, buyers buy them, and there is nobody left waiting to buy it at this price. Okay, this is known as the equilibrium price. Once you reach here, the market will not move from here unless something changes. Is this clear to everybody?
Yeah.
Yes.
Excellent. Okay, now, perfect. Okay, so now let's go through this. Okay, now let's relax the conditions. Okay, let's just say this is the demand curve. Okay, I'm going to call it demand 1. Okay, now this is the market for iPhones, and if the price were, let's say, 10 lakhs, people were buying. Okay, sorry, 10 lakhs. Sorry, not iPhone. Sorry, the kitchen robot. Okay?
Robot.
Kitchen robot. Okay, people were buying. Let's say 20,000 of them. I'm just making up these numbers. If the price went up to 12, let's say 11 lakhs, again, I'm making up these numbers, okay? People were buying, let's say, a little bit less. Let's say they were buying 18 lakhs, 18,000, okay? Okay, and if the price were, 10 lakhs, sorry, let's say 12, people were buying, let's say, so instead of 18,000, I'm putting 18,000 here. Let's say 15,000 were being bought. Just again making up these numbers, and now it's a downward sloping. Now Amitabh Bachchan comes and advertises this, okay? And let's assume for simplicity that the price was actually 11 lakhs, okay? So let's say the supply curve went through here, whatever, right? Okay, let's just go here. This is the point. Now Amitabh Bachchan comes and advertises. The price is still 11 lakhs, and now 22,000 people want to buy it.
Okay.
Where shall I put it on the graph? Shall I put it up here or down here?
You make another.
Correct. So I'm so bad now. You have to, give bad answers, okay? So very good. You didn't fall for it, Deepa, okay? So you'll go for it, okay? So this is 22,000. So what you do is you 22,000 and you take this price, okay? Is this clear? So now this point, the fact that Amitabh Bachchan has come and advertised for this product, the price has not changed yet, okay? Even if the price were 11,000, now instead of people wanting to buy 18,000, people are willing to buy 22,000. On the other hand, if the price had been 12 lakhs and people were willing to buy 15,000, now people are willing to buy, let's say, 17,000. So that point will be somewhere here. Does everybody understand what is happening out here?
Yeah.
With advertising, this is what happens, demand too. So basically what happens is that something other than the price of the good has changed. Advertising has happened, okay? Or it could be that they're saying we're going to open a lot more service centers, okay? We're going to open lots of service centers for these robots, okay? All right, so now, so this is it. Amitabh Bachchan advertises for them, it all moves this way. Does everybody see this? This is called an increase in demand. Please note that for our own convenience, we have built up this vocabulary. We know that many things affect how much we want to buy of anything. So we say, let's take the most important factor, which is the price of the good itself, and draw the demand curve against that, assuming everything else to be unchanged. And then we say, if anything else changes, how will it look? Is this part clear to everybody?
Yeah.
Excellent. Okay. Now, similarly, suppose it turns out that these robots are fine, but if they have to make, they're fine with making curry chawal, but when it comes to rajma chawal, they go completely berserk. And they short circuit and they start chopping things everywhere randomly. Okay. And then you have to, call the mechanic and they have to disable it. Okay. What will happen to the demand?
It'll fall.
It'll fall into. So it'll become demand 3. Demand moves inwards. Okay. Why? At the same price now, fewer people are willing to buy. Okay, so that's it. So let's put this up again. So this is my demand curve. Demand 1, increase in demand. 2. Decrease in demand. Everybody with me? Clear to everybody?
Yes.
All right, fair enough. Okay, now in a stock, in a share, okay, what could cause increase in demand for a share?
Can you repeat that?
What could cause the increase in demand for a particular share?
The market's rising and it's a good share.
The market is rising, lots more people are choosing to invest. So the fact that its price is going up will make the market rise. But what could it be? Lot more people become interested in investing in shares. Okay.
Yes.
Or that particular company is a gold, company that explores for gold. And now suddenly one of the workers is working and they, put the axe through the wall and suddenly they see this room full of gold, like this big vein of gold. And they say, oh my God, so now everybody rushes to buy the shares of this company. Is this clear?
Yes.
Okay, so that could cause increase in demand for shares of a company. What could cause
Performance.
It could be, they have very good performance. So people say, okay, next year, they'll do better. What could cause decrease in demand for a share?
Again, performance related.
Performance decrease in
Also,
demand for a share.
and other
Less
fiduciary
demand
matters.
for that particular product.
Other fiduciary matters.
Less demand for that particular product which the company is making.
Perfect.
Bad quality.
Less demand for that particular product which the company is making.
Also because of the economic scenario. Sometimes the whole economic scenario changes in the
Fall in
country.
quality.
Economic scenario.
Political situation in the country also.
Absolutely, absolutely. It could very good examples. All of these are all excellent examples of why there would be decrease in demand for a particular share. Also, it could be that it turns out that that company has been using labor, child labor in some country. Okay, people, I don't want to buy it anymore. Or they've been secretly dumping chemicals in the ocean, and they say we don't want to buy it. Okay? I don't want to buy it anymore. Right? Or they've been secretly dumping chemicals in the ocean. All right, so any number of things could cause a decrease in demand. All the points that you gave are absolutely correct. The market could be down, the product quality could go down, the profitability goes down, etc. Okay, all of these will cause a decrease in demand. Now, let's say increase in supply. Let's take a look at supply now. Okay. This is my supply curve 1. Now it turns out that COVID has hit. Okay. And factory workers are no longer able to come to work. And government has declared a lockdown in the country. So now let's say this is the market for cars. So fewer cars, now the producers can bring fewer cars to the market. There's a decrease in supply. Please draw it. Now I have to ask you a question, okay? Let's see which one it is, okay? So would supply 2 be a decrease in supply, or would supply 3 be a decrease in supply? Think about it and let me know. Which one would depict a decrease in supply? Shagun will answer this one. Shagun, you thought you would get away?
No, I'm looking at mine.
Yeah. Work it out, work it out. And guys, if you don't like me asking in particular, let me know. Okay, this is just a Socratic method, okay? Okay.
Sona, it will be good you use a few words of Hindi also. So
मुझे तो ठीक है मैं हिंदी में पढ़ाऊंगी मुझे तो बहुत ही अच्छा लगता है
नहीं पूरा नहीं but बीच-बीच में so it's
ठीक है
you can
I'm thinking the third, the red one.
Excellent, Shagun. Now, how did you figure that out? Very good.
Because it's lower, the numbers are smaller.
Sorry, I couldn't hear it. What she said?
He said supply 3 is less supply. Let's take a look. Let's take a look at price P1. So my question was, which of these curves, supply 2 or supply 3, shows a decrease in supply? Okay, so let's take a look. Let's look at the price of P1. Earlier, I was willing to supply what quantity? Q1. Now I'm willing to supply a lower quantity, let's say Q2. Is this clear? At the same price earlier, firms are willing to bring these many cars to the market. Firms are willing to bring 1,000 cars to the market each week. Now, because of COVID, the workers are just not there anymore. Okay, or only half the workers can come, or workers can come only on alternate days. So now they're able to supply only, let's say 200 cars. Is this clear to everybody?
Yes.
Okay, and similarly, if the price had been somewhere up here, this would have been the supply they're willing to supply. Let's say, and now they're willing to supply only less. Okay, that's it. Okay, very good.
Sona, where's the quantity demand?
We'll come to that in a minute, Shagun. So right now we are actually putting them separately. We'll put them together in a few minutes again. So in this quantity demand, it could be anywhere. We are not saying anything. Right now, all that we want to see is we're going to put it in a few minutes, we're going to put it together with the demand curve. Okay, so now let's do one thing, okay? Following on Shagun's question, okay, please draw a market in equilibrium. Any market. Let's say the market for under COVID, Haldiram chips. Okay, Haldiram namkeen, okay? All right. So just, or Uncle Chips, those blue potato chips, my God, I don't see them in the market anymore.
Uncle Chips gone now.
Oh, it's gone. The company only is gone.
I mean, I've not seen it.
I know, because I like that blue one. No? It's gone. The company only is gone.
I've not seen it.
I know, because I like that blue one. No? Okay.
Uncle Chips has been taken over by Lay's.
Oh, really?
Oh, okay.
Okay. All right. Now, this is your demand and supply. Okay. So now let's say this is the equilibrium. Okay. Now, okay, hold on just a second. Sorry. Supply 1 and demand 1, okay? And we have equilibrium. Now let's say supply decreases in this market. So supply decreases. What will happen to the equilibrium price and quantity? I want you all to draw it and figure it out. Please do it. And we will discuss the answer in a minute.
Can you just move from the screen? Yeah.
Absolutely, absolutely. Perfect.
Thank you. The supply.
Only the supply falls, you're saying,
Only supply falls.
at the same price.
No, I'm not saying anything about the price. I'm just saying is now supply decreases. What does supply
Okay.
decrease mean? Something other than the price of the good change, right? So COVID hit.
Right.
Okay.
So you are asking us what will happen to the price? when
Yeah,
the
what
supply
will happen to equilibrium price and equilibrium quantity, or what will happen to price? And what will happen to quantity now in the market? Firstly, will the market remain at this point at E1?
No.
No.
No. Where will it go?
Down.
Down?
I think the price will go up.
The price will increase.
Yes.
Since the supply has fallen, the price will increase. The equilibrium will change.
Excellent. So let's take a look. Has everybody had a chance to try it out?
Yep.
Excellent. So now let's do one thing. Let's do a decrease in supply. Fair enough? So now this is supply 2. And originally, what was this? This was quantity demanded 1, quantity supplied 1, correct?
Right.
Okay, now, let's take a look. Now supply has decreased. So we say supply has decreased. Okay. Now, at this original equilibrium price, PE1, okay, what is quantity supplied? It still remains, no, what is quantity demanded? Sorry. Quantity demanded still remains the same. Does everybody agree?
Yeah.
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 What happens to quantity supplied has decreased, correct? Quantity supplied has decreased at this price. So what is happening now? We have a shortage. Does everybody see that?
Yeah.
Quantity demanded now, quantity demanded still remains the same because at that price demand curve has not changed, only supply has changed. So there's a shortage, so the price will go up.
Wow.
It'll keep going up until it comes to E2. Okay, and then what will at E2 what will we have?
The quantity would have increased, the supply would have increased a bit to match the price.
So now at this price now,
At the new price.
at the new price, this will be the new equilibrium price, PE2. Does everybody
this
agree?
will-
And
yes.
the new equilibrium quantity will be Q.
Increased.
No, it will be decreasing compared to, not this. This is not where we were. This was just an interim position. So this was the original equilibrium.
Yeah.
This is the new equilibrium. So now at the new equilibrium point,
Lesser quantity.
Lesser
There's
quantity.
still a shortage.
no, market is clearing now. Now think
Okay.
of it like this. Okay, now this is the new supply curve, right?
Yeah.
At this supply curve, what is the quantity supplied? This is the quantity supplied.
But there's a difference between E1 and E.
Yeah, there is a difference. So the market will reach a new equilibrium. So please
Yeah.
note what has happened is the
It's a
supply
smaller
quantity-
market,
Yeah, the quantity in the market will be much smaller. It will be this much as compared to the entire.
despite the price going up.
Exactly, because supply has decreased. This is a very subtle point. Very good. So now, very good. So now we move from E1 to E2. Equilibrium quantity has decreased. Equilibrium price has increased. What you can really think of it is, in a way, think that this supply curve doesn't exist anymore. Jenny, this is your new equilibrium.
Sona, question.
Yeah.
That's how, even in the share market,
Yeah,
the new prices are
determined.
taken up and sustained.
Absolutely, exactly. That's exactly it. Wow, what a nice way of putting it. That something happens and people are like, why is it now? There's a new price here. And then it stays at that price, because it could be that I don't know, supply decreasing, right? Somebody has pulled those shares off the market and never bring them back again on the market. Okay, the company has withdrawn the shares, or let's say the supply of the product for that, let's say you're trading in, let's say, gold. Okay, so let's say you're an exchange trading, there's a company that buys gold for investors, okay, exchange traded fund. And suddenly the government says no more import of gold allowed. No more import of gold allowed. You can't import gold now from outside.
Supply is constrained, demand goes up, the price reaches.
No. Demand doesn't go up. Quantity demanded goes up. Quantity demanded, sorry, in fact, quantity demanded decreases.
Okay.
Quantity demand decreases from here to here. But the price has gone up, so quantity demanded.
So it's just the supply that's creating the.
Yeah, exactly.
New
Supply has
equilibrium.
decreased. Exactly. Supply has decreased.
So
Correct.
what you're trying to say is that at any point, the market always tries to find balance and equilibrium.
Excellent. Yes, the market always tries to find equilibrium. Now the question is whether how long it will take to get there is a whole other question.
So that's why it's so dynamic, because you're always changing your point of equilibrium.
Exactly. So because the ceteris paribus assumption, other things remaining unchanged do not hold. Things are always changing. Thousands of things are going on at the same time. Okay. So, but we know that major, and also what happens is how long it will take the company or the price to reach that equilibrium point is up for grabs. Some products that can reach immediately. Suppose somebody's selling chart outside Lady Shram College, okay? And he comes with the idea that, I'm going to sell chart, I'm going to sell, so many units, and it's going to take me from morning till evening, and he charges it 35 rupees. And suddenly all the chart is sold out within 4 hours, okay? And people are like, Bhaiya ji, hame aur chart chahiye, okay? Bhaiya ji, like this, how do you know? And he goes home, next day he comes, and, he doesn't immediately increase the price, but what he does is, all the things that he was giving for free, says now you have to pay for all of these things. Okay, or he just says I'm increase the price. Doesn't matter, whoever wants to buy can buy. So he can adjust the price. But when you think of like an Airbus or a car company, they just can't increase the price. Change it every day. Some of them have printed catalog prices, etc. Other things have to be done. So how quickly a firm will reach its equilibrium? I mean, a market will reach equilibrium is up for grabs. And between you and me, when we'll be doing the rest of the task, we'll be doing it with macroeconomics and Keynesian economics with John Maynard Keynes. You'll hear this term again and again. Keynes. Okay. So he basically said that I'll just finish one second and then I'll come to you. So Keynesian economics says we will get to the market clearing equilibrium, but it'll take a long time. And in the long run, we're all dead. Please go ahead, please, ma'am.
Yeah, so I want to understand when you're playing the share market. Now you say that the equilibrium, the market always tries to reach equilibrium, and that's how the price points keep changing. Now the whole fun of playing the market is trying to assess what the next price point would be with the given scenario of the things that are in dynamic state, right? So
Right.
You've got to think ahead and imagine what would happen to the price point if it was COVID, if it was this. Now, who does that? What are those are the analysts who do that. So is that something that even we have to do when you're investing in the market, or is it something you just leave it to the experts to do and follow them?
Okay, that's up to you. Okay, as we say Hindi mein, jitni meethi chini, jitni zyada chini, utni meethi chai. Okay, so you will have the skills to do it. Okay, many people. So what happens is I'll seem to be digressing. Okay, but I'll come up. Okay. I'm answering your question. Okay.
Sorry if I'm.
Yeah. So many years ago, I went to. Sorry, please go ahead, Sansi. Okay. So
I said I'm sorry if I made you digress.
No. I'm going to digress to give you an example. You didn't make me digress. You asked a very pertinent, relevant question to the class. I'm saying that next example that I'm giving, I'll seem to be digressing, but I'm not. So please, you absolutely asked the relevant question. Absolutely perfect timing. This is exactly why we're learning demand and supply. Thank you for justifying my teaching. I was hoping that people understand why I'm teaching this. So many years ago, I went to an stock exchange in Chicago. Now that exchange, it was, I don't know how many, it was a really, really, really large room, okay? I mean, because we are not living in the same space, so I can't describe to you. But let's say half the size of the Indian Parliament, okay, if it was a square, okay, and it was 3 stories high, and it had pillars, lots and lots of pillars to support this big floor space, and every vertical surface was covered with a television set, every vertical surface, and it was tuned to a news channel somewhere in the world, in Japanese, in Korean, in Thai, in Chinese, I'm sure there was some in Hindi, I could not see that. Okay, all of them. And people were looking at them constantly. So those were the people predicting what's going to happen next. Does that answer your question, Sansi?
Yes.
Okay, so if you can be on that floor, you can definitely beat the market. Because you will see the event hitting, and but mostly what happens in the stock market is when an event hits, within 15 minutes, it is acted upon. So if you're willing to invest the time to be there. And, once you've done this, and even already you know which way something will move, okay? So suppose somewhere it says, that, sadly enough, Japan may, earthquake has happened in Japan and tsunami has happened there. Immediately, you know how the market is going to react. Earthquake in Nepal, you know that, okay? COVID outbreak there, Trump getting elected, war breaks out between Iran and Iraq. Anything can happen, right? Or negotiations fail, or in America, we'll do this later, unemployment numbers come out, or government of America does, bond trading. All of these things, you will know how they react. So the way that you are able to predict is if you have the information. Sadly enough, by the time most of us get the information, because we're not completely tuned in and watching it every minute, we are not able to do that. That was my digression. It would seem like I'm talking about some other story of my life. So that's it. So there are people who do this for a living. So they are basically following the actual news and trading on that. Okay. Sometimes what people do is something also people are called trend. So there are people who do fundamental analysis, which we'll look at when they say what is the future earnings of a share and how to value it today. So that is what we'll be doing when we do net present value. It is there in your, in one of the classes. Some other people will look at the trend and have a very good feel for it. They say, what? If it goes up 3 times, then it will go up the 4th time and then it'll go down. Like something like that. Okay. What that is based on, I don't know, but people manage to make money sometimes from that. Okay. Otherwise, this is exactly the kind of information that people are looking when they want to beat the market. Some people say, what? I don't have the energy to do that. Okay. There is so many, and sometimes you have to pay for this news also, because, you can't get all the news all the time. And by the time it hits your news channel, it could already be, 10, 15 minutes delay. So you can pay for this channel and say, okay, do I want to pay for this? And will I make money from this? Alternatively, you could say, I'm just going to be in the market for a long time and I'll let the market decide. Another thing when we do perfect market is that when you're buying a share, under most circumstances, all publicly available information is already incorporated in the value of the share. Do you see what I mean? If something has happened, that has already been traded upon. So when you buy a share, if enough people are doing this kind of analysis where they're watching the news and trading on the basis of that, if it's going to go up or go down, then the price that you end up paying already, has included all this information. So it's a cheap way to get a rightly priced thing. But then you have stock market booms and, like not booms, you have bubbles, sometimes the market goes hysterical, it sometimes
Right now, isn't it a bubble? Isn't it a mad bubble right now? Because they don't know when it's going to burst.
This is what people are saying, and having lived, and I'm 53, having lived through enough bubbles, I will, so there's something known as a PE ratio, okay? Price of the share to earnings ratio. And typically it's in the range, and we'll study that also. So it's in the range of 15 to 20 people say it's okay. But if it goes much more, then it is typically either it's the indicator of some bubble or it is an indicator that you really expect the company to grow very fast. So, we don't know. So it could be the next new frontier that internet has created this, this dynamic, or artificial intelligence has created this world, or it could just be a big fraud. It could just be a bubble. I don't know. So Indian stock market, it has gone up very dramatically, but that is partly in correction what it had gone down the year before that.
But can I, if it's not a problem to everyone, I just want to understand, is it because people don't really have that kind of money post-COVID to really have that much avenue to earn, because everything is constrained in terms of investments? The banks really not giving you great interest. So the best bet for your buck is actually putting it in the market, because that's the only thing going up. And because everybody is running towards the market, that's what is making the market churn. Is that it, or
it's a very intelligent interpretation of what could be going on? Because everybody's just pulling on, partly, okay. Another thing that we'll study, okay, and we'll do this when we do interest rates, okay. Oh, I'm so happy. All my lectures are being justified in this lecture, okay. So basically, what governments do, okay, they deliberately go out and reduce interest rates in the economy. We'll study why they do it, how they do it, okay? With the result that even your fixed deposits get very little money, okay? Because all the interest rates move in tandem. So now people are saying कि FD मुझे 3% मिल रहा है, मैं क्यों रखूं? मैं just stock market में डाल देता हूं.
Correct.
So now the problem with investing in the stock market is not the problem investing in the stock market. The question is, what does this lead to? Is just an increase in the demand for shares. You see, now the question is, ideally when you're buying shares, you should buy a share saying, is it the correct price?
Correct.
And how to price it, we will study based on future earnings. So when the market share price is way out of whack with what you're expecting to get in the future earnings from it, and we'll find a way to, come up with a single number for that, that's when people say the market is overpriced. But once in a while, like they say, economists have predicted all 9 of the last 5 recessions. Okay. So once in a while, when people say the market is overpriced, it's actually not overpriced, but actually, there could be a situation where the economy is actually got some dynamic thing happening, and so there is growth in these shares. On the other hand, it could be a simple fraud like a Harshad Mehta situation, or it could just be unnecessarily exuberance, 2000, or it could be that people just kept buying.
Pure necessity.
Sorry?
Pure necessity.
It could be necessity, right? But even then, so then people are saying I'm getting this much return, but then you have to see how much return you're getting. So the fact that in the bond you're getting very, in the fixed deposits you're getting very little, people have put it there. And as you said, for many people, there is no other source of earning because, they have lost their jobs in COVID. So they're investing there. So that could be part of the reason that drives that. Okay. So that is absolutely correct. And, the question of whether a share is overpriced or not is an art and a science. Because what you're doing ultimately is you're trying to estimate what the future earnings of that share will be. So, different people will come up with different estimates. But even then, they should not be that different from each other, within a band. Okay. So that is absolutely correct, Hansi. So why the market is up, it's a big surprise to me also, to be honest. Okay. And I remember many, many years ago, and, this is what comes from learning. Okay. I was studying in JNU and, that time the Harshad Mehta scandal was going on. Okay. And people didn't know about it, okay? But I remember that the finance minister came to Jawaharlal Nehru University for a conference, and all the professors surrounded him and said, we've looked at the fundamental analysis, and, the market is overpriced and something is going on. And he turned around and said, it was just around 1991, right? Around that time, right? Between 1989 and 93, I was there, right? He said, oh, you communists, whatever, he said, you're never happy, If the market goes up, you're unhappy, You can't even imagine the economy is doing well. And to be honest, I have to confess, I agreed with the finance minister, okay? I mean, out of respect for my professors there, of course, at the end of the day, my professors were right. There was something going on. But then once in a while, there is, dynamics in the market. Internet changed the whole dynamics of the market.
Yes.
So it did lead to a lot of companies growing and, a lot more wealth being created and a lot more ways of doing things. So maybe artificial intelligence and, maybe this is the second wave in which internet is giving to us, So I don't know, So again, I'm not able to estimate that, So that is the story. But very good questions, Nancy. So yeah. So So when it comes to investing, so people do, so there is trend analysis, there is fundamental analysis. Then there is also people who just study the company. And there's some people who say, I'll only invest in listed companies. Some people say, I'll only invest in unlisted companies. Some people say that I'll only invest in growth in companies. Some people say that I study, whether the sector is growing, what are the management like, things like that. Or some people just say, this is not worth my effort. I'll pay a mutual fund manager, or I'll pay an investor, depends. Right? So that is it. Right? Now, okay. So, sorry. All right. Anybody, any other questions? Very good questions, guys. Okay, now I have one question for you. Homework. I promise you homework.
Yes.
Yeah.
Everybody sounding so depressed, okay? So, and I will be checking the homework, okay?
We lost you.
I know.
We lost you. You just froze.
The word homework sounds a bit scary right now.
Oh, no, it's okay. It's only for, it just will happen, okay? So imagine a market in equilibrium, okay?
Can you please repeat because you just froze a little
I thought you
while.
were joking about froze. Okay, sorry. I thought you were joking when I said homework. Okay, so I'm giving you homework. So the homework is as following. Imagine a market in equilibrium. Demand 1. Supply 1. Okay. Okay. Oh, sorry. We haven't done increase in demand yet. Sorry. Hold on. Before we do homework, okay. Now, suppose I tell you the market is in equilibrium, okay? Suppose there's an increase in demand. Please draw this out. Increase in demand. Please tell me what will happen in the market.
Shortage of supply.
So please draw that out. And what will happen to equilibrium price and equilibrium quantity? Remember how we worked it out when supply changed and we came up with a new equilibrium?
Yeah.
The price will fall.
Price
Will fall.
will be the same.
Price will go up.
Demand
Price
increases. Demand increases.
Okay.
When the demand increases, the supply will also increase.
Supply will increase, or quantity supplied will increase.
The quantity supply will increase. The quantity supply.
Oh, that's okay. That's okay. Trust me. This is a question that comes in every exam, and then, it's okay. We have to get there. It's a vocabulary thing only. Doesn't matter. So please try it out. Please draw this situation out. Who hasn't answered a question up till now? Let's see.
Repeat your question, please.
Okay, so I am saying a market is in equilibrium. Okay, can you see it? It's in equilibrium.
Yeah.
Demand is at E1. Now suddenly somebody advertises for this particular product, and there's an increase in demand. Tell me what will happen to the equilibrium price and equilibrium quantity.
See, when the demand increases, I think the
Please
supply
draw.
has.
Okay, quantity supplied will change,
Yes.
but everybody try it out. Everybody try it out, and then we'll draw it. Okay.
Okay.
The price goes up and so does the quantity. Am I right?
Let's take a look. Equilibrium price and quantity. Has everybody tried it? I'll give everybody a couple more minutes. Please try it on your own. It doesn't matter if it's right or wrong. All answers are correct answers. Okay, we're rolling.
The quantity.
to take Arya for a physical exam.
Sorry?
Will be a short supply.
Right. So basically, now takes a look. Okay? So quantity demanded one, quantity supplied one, right? We agree? This
Yeah.
original equilibrium, okay?
Yeah.
Now we are saying that demand increases, okay? So let's do an increase in demand, okay? Everybody agree this is an increase in demand?
Yes.
Yeah.
Now, with an increase in demand, now at this original price, okay, what is the quantity supplied? It's still the same quantity supplied? Because at this price,
Yes.
Yes.
quantity supplied still remains this much. But what is quantity demanded now?
That's more, no?
Right. Quantity demanded, you go all the way up to the new demand curve. All the way till here. Can you see this? All the way till here. So this is the new quantity demanded. Quantity demanded 2. Okay. Now, quantity demanded 2. So now which one is greater? Quantity supplied. This is, so I'll call this quantity supplied QS11 and QS22 also, right? Same thing. Quantity supplied is not changed at this price, right? Whereas quantity demanded has increased. So which one is greater now? Quantity demanded or quantity supplied?
Demanded.
Quantity
Demand.
demanded is greater, there is a shortage.
Shortage, yes.
And so what will happen is the price will go up. It will keep going up until it reaches the new equilibrium point, E2. Okay. And what will be there at E2? We can take a
The
look.
demand will decrease a bit.
So PE2,
Price goes up and demand decreases.
no.
No, you bring the line in between, no? So there's a difference in the quantity.
Right, yeah. So this will be
Shortage will be less.
QE1,
Shortage will be less.
QE1, QE2. Now the new equilibrium price will be this one. So
That's
equilibrium-
Q3 will be the new equilibrium price, right?
this one, QE, huh? So QE1, and then we can name it anything, it doesn't matter, QE2. So the new equilibrium price will be here, a new equilibrium quantity. So when demand goes up, what you will notice is both the
Price
equilibrium price goes up and equilibrium quantity goes up. Okay, so for example,
Your voice is not coming.
price has gone up, no? This is a new. Originally, this was the equilibrium price. Now this is the new equilibrium, right?
Yes.
Right? Because, basically in intersection, you can in a way think that this demand curve doesn't exist anymore.
Okay.
That's creating confusion.
This demand curve is gone now. This is the new demand curve. So this will be the new price and this will be the new quantity. Correct? Should I do this one more time?
No, we are good.
Wait, do this.
I'll do this one more
Because
time.
your voice got, beach mein voice.
ठीक है, मैं बताती हूँ. I understand the beach wala thing. No, hold on just a second. All right. So now I'll just, I know how to explain. Okay, different way. Okay, thank you. So,
For every new demand or new event, we make a new line, right?
If something other than, say, okay, if demand, okay, 1 second, okay. Let me call this E1. Fair enough. And at this point, what is quantity demanded? Quantity demanded 1, quantity supplied 1, correct? Equal to each other. Okay, now what we're saying is demand goes up. Demand has increased. Okay. Now, what we're saying is the market was already at this price. Suddenly, demand has gone up. So the price is right now this. At this price, what is the quantity supplied now? Still the same?
Yeah, Q1.
So this becomes QS1 only. And at this price now, what is the quantity demanded? QDD2. Does everybody see that?
Yeah.
So now the market is in disequilibrium because what is happening is people want to buy more of the good than is being provided at this price. Does everybody see that?
Yes.
So therefore, the producers will then increase the price. You're thinking, suppose they increase the price till, you were thinking till here, right? I think you were thinking, right? Or somewhere?
Yeah.
If you suppose they increase the price till here, suppose, just say, okay? Suppose you said this was the quantity demanded at this point and they increase the price, then it does. This price actually, quantity supplied will be this much, but what will be the quantity demanded at this price? It will be this much.
Just say that again.
So what we are saying is, I think what is instinctively people are thinking, why are we not at QDD2 only? Right? Right. What happens is that QDD2, what is the quantity supplied? This is the quantity supplied, this is the quantity demanded.
The price is just phenomenally too high for it to go. So you need to find the equilibrium in between.
So this price is now there's a shortage at this price, right? Shortage, right? More people want to buy than is there in the market. Okay. Now the question is, how much should the price go up to? Suppose you said the price goes up all the way till here. If you go up till here, at this price, what is it? This is quantity supplied and this is quantity demanded. So there'll be a shortage. So there'll be a surplus if you do this, right? So it can't go up till here. So what we say is the price goes up a little bit, and then it goes up a little bit more, then goes up a little bit more until it hits here. At this point, what happens? Demand and supply are equal. Because this is the new demand curve, right? And the old supply curve. So they're equal at this point. And so even though at this price, quantity demanded is skewed to DD2 at this price, the suppliers are only willing to supply this much. So consumers want to buy this much. So what will happen is the price will start going up. Producers will increase the price until they say that they want a market clearing price. Producers could increase the price till here also. It doesn't matter. But at this price, you went up here. At this price, what would happen? At this price, this is the quantity demanded, and this is the quantity supplied. So there would be a surplus. So it's not there. It has to be somewhere in between. Depend the way these curves are drawn. There are other ways to draw these curves also. So does everybody see that at this point there's a shortage? So then maybe the price comes here. So this becomes a shortage. Then this becomes a shortage, and then finally we are here. Is this clear to everybody?
So basically, the suppliers cannot just hike up the price as much as the demand. You have to reach a
equilibrium.
Common ground.
Exactly. And if we ever take other classes to see the impact of taxation, what we will notice is if the demand and supply curve looks like this, if the government puts on 100, suppose a pack of cigarettes was selling for 100 rupees, if the government puts a tax of 10 rupees on it, the entire price increase will not be passed on to the consumer. The producer will also bear part of it, because if they take the price to 110, they will be, they will not be able to sell all the cigarettes that, that they wish to supply at 110 with the tax. Okay. Anyway, so 1 second. Okay. So price and quantity. This is demand 1. And then we have.
Basically, the thing of this class is price and quantity always decided by the demand and supply for a particular product.
Absolutely, the market. Okay, there are some market structures where the producer can pick one of them, like a monopoly. They can pick either the price or the quantity, and the market will decide the other one. Okay, there are some situations like that. Okay, but PE2, yeah. So
Can
the
you give
market.
an example of that?
Yeah. Okay. So. So suppose somebody is the only seller of a good in the market, okay? All right. So they can decide where to be on the demand curve. Because they can decide how much to supply of the good. They're the only supplier.
So they decide the price, that decides the demand.
Yeah, so that decides the quantity demanded. That will tell you where you are on the demand curve. But when we draw the supply curve, actually the supply curve is drawn on producers' profit maximization incentives. Okay, it takes 2 months to derive this curve, but anyway, of classes. But this supply curve is drawn on based on all those quantities, for different prices, which will maximize the profits of the producer. And therefore, the supply curve will be such that the producer will pick this point. Theoretically, the producer can pick some other point if they want to do revenue maximization or they want to grow their market share, if it's the government that doesn't care about profit maximization.
So they make their supply curve based on the revenue they want to earn.
Yeah, so supply curve, So supply curve is basically how much are they willing to supply at each price. This supply curve is drawn based on profit maximization. Okay. If they have some other incentive, then this will not apply, and then you can pick any point. If you pick any point, you can pick this point, then the price will be given by the market. Or if you pick the price, then the quantity will be given by the market. So you cannot set both of them. Okay. So this is your demand and supply. Now demand increases, demand too. Now at this price now, original price of this, okay. 1 second. At this original price, this still remains the quantity supplied because the supply curve has not shifted, and this becomes a quantity demanded. This becomes a new quantity demanded. Quantity demanded, now this is 2. Quantity demanded is greater than quantity supplied. There's a shortage, and so the price will start going up. It keeps going up until it reaches this point E2. At this point now, the market is clearing again because at E2 now, what is happening at E2? The new demand curve is cutting the original supply curve. So this is PE2. And this is QE2. Now, please note one other thing out here, which many of you have been talking about. So let's do that. QE1, sorry. And QE2, I just over. Now, please note, equilibrium price has gone up. Sorry. And equilibrium quantity has increased. Please note, quantity supplied has also increased. Can you see that?
Yeah.
So more is being bought in response to the higher price. Is this clear to everybody?
Yeah.
Yeah.
Only thing is, we're not saying supply has increased, quantity supplied has increased. Correct? So when demand goes up in a market, producers will bring more to the market.
Correct.
Producers will produce more. Correct? So this is it. Okay. Now, so this is called increase in supply. Now, think of it like this, okay? That suddenly because of COVID, hand sanitizer demand went up. So you'll notice that in the market, the price of sanitizers goes up and more sanitizers are being sold.
Yeah. Perfect example.
Yeah. So that's it. So you will see that. Okay. Now homework. Anybody want to guess what the homework is? I'll draw it out for you. By the way, girls, amazing questions. Thank you. Each of you, thank you. Price, that really helps to make the class come alive. Thank you. Price, quantity, demand, 1. Supply 1. E1, CE1 and QE1. Now, both demand and supply increase. Sorry. Demand increases and supply increases. Please draw this out. This is your homework. Everybody with me? So in the market, actually, following things happen, okay? In the market, either demand can go up or go down, supply can go up or go down, or demand and supply can both go up. Demand can go down and supply can go down. Demand can go up and supply can go down, or demand can go down and supply can go up. Please draw one situation. That's it. If you wish, you can draw all the others also, but really for the next discussion, I just need one of these.
So both go up, demand and supply.
Demand and supply both increase. What will happen in this market? what will happen to equilibrium price and what will happen to equilibrium quantity.
Okay.
Okay, so and please don't discuss your answers with each other. We will
So shall
have,
we post it to you personally?
no, we'll have a fight out in the next class. Okay,
Okay.
we'll have a few minutes of showing of hands, and people say, but you're wrong and I'm right, and you're wrong and I'm right, and it'll turn out that most people are right.
थोड़ा confusing है अभी तो
Of
दिमाग
course,
में.
that is exactly why. So this is a teaching tool. So you will, and who said that? Is that Sansi who said that?
No,
Pratibha.
Pratika, you have already got the correct answer. If you're confused, that is a good sign, because I know exactly what you're confused about. Okay, so let me put it like this: that this situation, demand increase, supply increase, can have one graph, or it can have more than one graph to answer it.
Okay.
Oh, you're giving us a hint.
I've given you the hint. Okay, so if Pratibha, that addresses your concern,
Sorry.
does that address your concern, Pratibha, about your confusion?
No, I will see.
नहीं मतलब
Just try it out. See, guys,
एक के दो भी हो सकते हैं.
एक के
एक
दो
के दो भी हो
दो के
सकते हैं.
तीन भी हो सकते हैं. दीपा, दो के
हाँ,
तीन भी हो सकते
नहीं तो बहुत सारे 3-4 ऑप्शन हो सकते हैं. If the demand increase and the supply increase,
हैं. Right.
so what will be the price? What will be the product? So many points will come. But that's why I'm
Exactly.
really confused. I don't know what.
Good. So what we will do is we will get rid of your confusion. We will incorporate all the possibilities and give you an answer. Okay. So do that, and we will. So just do one thing, okay, guys. This. Okay. So do that, and we will. Sorry. Yeah. So this method of teaching is actually gets you to think. Okay. So please, we are all friends learning from each other. All of us. I'm learning from you. You're learning from me. Okay. It's a quid pro quo. So just be chillax and give the answer. Okay, we are all amongst friends. This is a cool learning environment. Okay, so don't worry about what answer you get. ठीक हो या गलत की फर्क पड़ना, अगर पता तो पढ़ने थोड़ा आते यहाँ पे. तो यहाँ पे थोड़ा बैठे होते, फिर तो हम घर पे बैठे होते अपने. क्लास में आए इसलिए कि हमें नहीं पता है ना. तो I also did not know it when I was born. I also learned it. So it's just, as I tell people, I learned it before you, which is why I'm on this side of the camera. That's all. That's it. There is, and all of you already know all this stuff. The only reason we are doing it formally is it helps to visualize certain things. All of you, if you're running your own homes, if you're running a family, if you're housewives, you're already, the word economics actually comes from homemaker. The word economics actually comes from somebody who manages a house finances.
Like हम लोग तो ये सीखे हैं ना कि स्टॉक अगर बिक गया है, स्टॉक खत्म हो रहा है, फटाफट स्टॉक मंगा लो भाई, हो गया. सप्लाई बढ़ गया और स्टॉक जमा हो गया.
हाँ.
पर प्राइस तो नहीं बढ़ा सकते हैं.
क्या जी?
प्राइस तो सेम ही रखा है ना.
हाँ. बिल्कुल. आप किस चीज का स्टॉक कह रहे हैं? जैसे चावल का घर में या गेहूं या कुछ खत्म हो रहा है, उसका कह रहे हैं आप?
नहीं, I'm talking about my store.
She has a clothes store, no?
Right. Excellent, yeah, Pratibha ji. So we will talk about that also, about your businesses also. So that is there. So
no, it's okay. That was a very easy thing to do. That was not a दिमाग लगाने का ज़्यादा.
I'm running a business. For me it is so funny because I've been both in the corporate sector and as a professor. तो हम तो कहते हैं यार जिसने दुकान नहीं चलाया उसने क्या चलाया? You have to be, सारा theory पढ़ लिया, लेकिन वो कहते हैं ना एक दिन गल्ले पे बैठे तो पता चलेगा, the real, I used to always tell my students in college, beta, what your father and mother can teach you, I can never teach you in 1,000 years. I said, so please, whenever you get an opportunity, sit in the shop, learn the business. मैंने कहा मैं आपको सिर्फ थ्योरी पढ़ा सकती हूँ, आपको सिर्फ विजुलाइज करने का सिखा सकती हूँ, जो आप 20 साल में सीखेंगे मैं आपको 2 दिन में सिखा दूंगी, लेकिन experience nothing to beat it. So a person running a business is the real economist. हम सब तो theory में ही पढ़ाते रहते हैं. Luckily I got lucky, I was able to actually do 6 years of corporate also, so therefore I saw a little bit of it. But otherwise, so do not, man, the experience of a person running a business is the biggest experience.
I guess we'll all also benefit in this class for those who have been running their business.
Exactly. And women who've been running their homes, that is the biggest thing. The biggest savings in India are household savings. The only savings in India are really household savings. Government doesn't save, corporates don't save.
But मोदी ने पर्दाफाश कर दिया सारे सेविंग्स.
डिमोनेटाइजेशन करके इतना पैसा निकला है उस डिमोनेटाइजेशन में, किस लिफाफे में, किस तकिए के गिलाफ में से, किस अलमारी में, न्यूज़पेपर के नीचे से कितने पैसे निकले. Indian women are always saving.
Yeah.
Yes, huh? So that is
Saving and hiding.
saving and hiding is also good.
Yeah.
You must hide it, you know. नहीं तो वो दूसरी चीजों में subsume हो जाएगा. चला जाएगा. That is it.
Acha, Sona, I was just one request about Friday class. Since everybody is here, can we do it half an hour early if everybody is okay?
I'm
fine
okay with it. I'm
I'm
okay with
fine.
it.
I'm fine too.
I'm fine too. Fine.
Shagun, is that okay?
Yeah, I'm fine with that. I want
I'm
to
fine too.
schedule Sona.
Shagun, is that okay? Yeah, fine with that. I want to know.
Schedule like tomorrow, Friday you have a class, and then when's the next one?
Deepa, 1 second. Hold on, just a second. I'll just tell you.
Sunday, फिर Sunday पड़ेगा हम लोग का.
Let's not have a class on Sunday, no?
Achha, girls, actually, the alternate days is fine. The only thing is I'm leaving for Vipassana on the 21st. So everything has to be done by the 20th. So
So
that's the only
Sunday की class Saturday को कर लें?
ठीक है, मैं देख लेती हूँ timing. Let me just see.
Yeah, everybody, do you want to do Sunday's class on Saturday or a Monday or something?
I don't mind.
Yeah, I don't mind.
Either Monday or Saturday.
Better. Sunday the
we
men
have
are.
लगातार 2 classes then, Monday, Tuesday.
ठीक है, हाँ. तो Sunday की class,
that's okay.
दीपा, हाँ. Sunday की class Monday को करनी है दीपा?
Yeah,
Monday
that's
को या
okay.
Saturday को, whatever everybody is good with.
Just, I'm okay with anything.
I'm also cool with anything. Deepa, just pick a time.
So time यही रखते हैं. And Sona, you were mentioning, do we want to shift this time to 3:30 for all the classes or
No,
Friday?
4 is fine. No.
4 is fine. Okay.
4
So
is
just
fine.
for this Friday, 3:30, please. I
Okay,
don't
done.
want to miss the class.
Okay.
Okay.
Yeah, no problem. Yeah.
Okay.
So we are doing on Saturday then, the Sunday class.
Okay, done.
Okay. Done. Done.
3:30
Yeah,
p.m.
Saturday is better. Yes.
No, Saturday is 4 p.m. only, na?
Yeah.
Yes, 4 p.m. please. Yeah.
ठीक है.
Shagun, are you good with Saturday? Shagun?
Sorry, yes.
Shagun, are you good with Saturday?
Yeah, I was just thinking one is, you said not Thursday, Friday you have one, right?
Yeah, Friday at 3:30 India time.
Oh, 3:30, okay, that's fine. And then Saturday, 4 p.m.
4 p.m.
And then Saturday 4 p.m. and then following Tuesday 4 p.m. following Thursday 4 p.m. and
Yeah.
then following Saturday 4 p.m.
Yeah.
Done. I've made the changes.
Okay.
Thank you, Sona. Very interesting session.
Thank
Thanks.
you.
Thanks, Sona. Thank you.
You girls are amazing. Thank you for all the information and all the learning that I'm having from you. So
Thank you.
Thank you.
Bye.
Thank you. Bye. Bye.
Bye. Bye.
See you on Friday.
See you on Friday. Bye.
Yeah. Bye. Bye. Thanks.
Bye. Thank you so
Bye,
much.
Pratima ji. Thank you. Thank you. That's so sweet.